On June 30, 2017, CDSL thrilled the streets with its blockbuster listing at a premium of 68% to the issue price. But that was not the climax of CDSL's success story. It was just the beginning. The real winner were those who held on to the stock over all these years. From its listing day close, CDSL has delivered an unbelievable 1,133% absolute or 36.5% annualized return. In other words, it has turned 1 lakh into over 12.3 lakh. On the other hand, the same amount would have been 2.8 lakh in the Nifty 500. Indeed, CDSL has proved to be one of the best wealth creators of the stock market. Now, NSDL, CDSL's peer and the other company in this depository duopoly, has come up with an IPO. The company is raising about 4,000 crores. So, given CDSL's blockbuster performance, will NSDL follow suit? Hello and welcome to ET Money's YouTube channel. Today, we will analyze NSDL's IPO for you so that you can decide whether you should invest in it. Now, the IPO is open from Wednesday 30th July to Friday 1st August. So, you have only a couple of days to profit from this opportunity. And that's why you must watch this video until the end. Now, this video belongs to our playlist on IPOs. To watch more such videos, you can check it out. The link is in the description. Now, this video is divided into certain sections for the ease of comprehension. So, let's start with the IPO details. The key details of the NSDL IPO are on your screen. As we saw, the total issue size is about 4,000 crore. The entire issue is an offer for sale and there is no fresh issue. In a fresh issue, the company issues fresh shares, and in an offer for sale or OFS, the existing shareholders sell their stake. Now, the IPO opens on 30th July and closes on 1st August. The lot size for retail investors is 18 shares. The price band is 760 to 800. So, at the upper price band, the minimum investment amount is 14,400. The current shareholding is 20 crore shares, and since no fresh shares are being issued, the post-issue shareholding will continue to be 20 crore shares. The company has no promoters, is professionally managed and has renowned financial institutions as its shareholders, including IDBI Bank, NSE, HDFC Bank, Suti, Deutsche Bank, SBI, etc. Of these, 6 institutions are taking part in the share sale: IDBI Bank, NSE, Union Bank, SBI, HDFC Bank and Suti. IDBI Bank and NSE currently have a stake of 26% and 24% respectively in NSDL. They are required by SEBI regulations to bring their holdings down to 15%. This is one of the main reasons for the NSDL IPO. Now, the IPO also an employee quota of 85,000 shares at a discount of 76 rupees per share. So, these were the key IPO details. Let's now move to the next section. But before that, here's something important. You can now get cash to enjoy your present while staying invested for your future with Loans Against Mutual Fund on the ET Money app. The interest rate is just 10.75% per annum and there are no fixed EMIs. Pay interest monthly and repay the principal amount whenever it is convenient for you. Plus, there is no need for a CIBIL score. So, go ahead, check your eligible limit on the ET Money app. And there is more. For the next 3 months, any withdrawal you do, you will get a special rate of 9.99% per annum. So, do it now. Okay, as a demat service provider, you would have already heard of NSDL. More specifically, NSDL is a SEBI-registered market infrastructure institution offering a wide range of products and services. It has 3 businesses. Its core depository services, NSDL Database Management Limited or NDML, and NSDL Payments Bank Limited or NPBL. Let's first talk about its core depository business. The company pioneered the dematerialization of securities in India in 1996. It operates a centralized digital bookkeeping system that facilitates the holding and transfer of securities in electronic form. Now, as of March 2025, it is the largest depository in India, both in terms of market share, in demat value of settlement volume, and the value of assets held under custody. Next comes NSDL Database Management Limited or NDML. NDML is a technology solutions and product services company focused on developing e-governance solutions, payment solutions, regulatory support systems, market infrastructure services, industry solutions, and digital customer onboarding products. It operates as an insurance repository, a KYC registration agency or KRA, a registrar, and transfer agent or RTA, a national skills registry, etc. Now, as of 31st March 2025, the company held about 1.9 crore KYC records. In FY25, NDML acted as a registrar and transfer agent for 13,485 ISINs. Then comes NSDL Payments Bank Limited or NPBL. Now, NPBL offers a range of financial products and services on a B2B2C basis, including digital banking solutions, prepaid cards, UPI payment services, point of sale solutions, cash management services, and distribution of third-party products such as life insurance, health insurance, and mutual fund schemes. In FY25, NPBL's revenue amounted to 720 crore, which is about 51% of NSDL's total consolidated revenue. Now, NSDL's core depository business contributed about 44% of the operating revenue, and the rest came from NDML. However, what's noteworthy is that NSDL derives a majority of its operating profit from its depository business, while its payments bank business contributes just 1%. NDML contributes about 7.6% of the company's operating profit. So, from a profit perspective, NSDL continues to be a depository business. However, from a revenue standpoint, its payments bank business dominates. So, this was about NSDL's business. Let's take a look at the company's financials now. NSDL's key financial numbers are on your screen. Over the last 2 years, NSDL's revenue has grown by 18% per annum from 1100 crores to over 1500 crore. Its profit has grown at 21% per annum from 235 crores to 343 crores. The company has enjoyed an operating margin of upward of 20% during this period. Its return on equity or ROE is at a respectable level too, with an average of 16.6%. The company is debt-free and enjoys decent cash flows. So at a broad level, it has good financials. But that's not all. We must also compare it with its peers. Now, NSDL's standalone depository business competes directly with CDSL, about which we talked at the start of this video. So let's compare NSDL's standalone numbers with those of CDSL's. NSDL has assets worth 464 lakh crore under its custody as compared to CDSL's 71 lakh crore. By this metric, NSDL is almost 7 times bigger than CDSL. Now, in terms of number of issuers of securities, NSDL has almost 80,000 while CDSL has about 36,000. So NSDL's number is over twice that of CDSL. But CDSL has almost double depository participants as compared to NSDL's. A depository participant is an intermediary between the company and investors, such as a stockbroker. CDSL also has a higher number of Demat accounts at 15.3 crore. NSDL's Demat accounts at 3.95 crore are just fourth of that. Now, major reason for this difference is the tilt of the two depositories. While CDSL caters primarily to retail investors, NSDL is used more by institutions. Now, given the institutional tilt, the 1.18 crore, the custody value per Demat is much higher for NSDL than CDSL's 5 lakh. NSDL services almost the entire value of equity, debt, and other securities held by foreign portfolio investors or FPIs in Demat form in India. Moreover, it has a market share of 97% of the dematerialized value of debt securities in custody, aggregating to over 52 lakh crore. Now, in terms of market size, NSDL is less than half that of CDSL. At 731 crore, its standalone revenue is also less than that of CDSL's 985 crore. CDSL also trumps NSDL in terms of revenue growth. CDSL's standalone revenue growth of 35% per annum is much higher than NSDL's 23% per annum. The same is true for their PAT and PAT growth too. Both the companies have high operating margins, with CDSL having a slight edge over NSDL on average. In terms of average ROI too, CDSL beats NSDL hands down. Finally, when it comes to valuations in terms of the PE and the PB ratios, NSDL is at quite a bargain as compared to CDSL. NSDL's PE of 46.6 is a steep discount to CDSL's 68.2. Its PB of 8 is much cheaper than CDSL's 19.2. Now, since NSDL's payments bank business under NPBL contributes over 50% of the company's operating revenue, it's worthwhile to check how this business stands with respect to its peers. In FY25, NPBL reported a total revenue of 722 crores. That puts it behind most other payments bank. With a profit of 2 crores, NPBL is profitable but has a minuscule margin of 0.26%. Now, due to this, the return on equity is just 1.26%. Overall, NPBL has much ground to cover with respect to its peers. Okay, let's now take a look at some key red flags in NSDL's IPO. But before that, here's something useful. You can get all financial data of listed Indian companies, including CDSL and very soon NSDL on T-Money. You can access the financial statements, shareholding history, peer comparison, corporate actions, etc. to comprehensively research any company and pick great stocks. Do try it out today. In IPO investing, it isn't sufficient to evaluate the business and financials. One must also pay attention to certain IPO related metrics. Now, we discussed them in our video analyzing IPOs, so you can watch that video to learn more. In that video, you will also find 5 IPO hacks to increase your odds of success in IPO investing, so do watch it. As always, the link is in the description. Alright, so here we will discuss the red flags in NSDL's IPO based on those metrics. First, the entire issue is an offer for sale or OFS. This implies that the company is not going to benefit from the IPO proceeds. The IPO proceeds will go directly to the selling shareholders. Second, the company has outstanding litigation of about 320 crore against it. To put this number in perspective, you can compare it with the company's FY25 profit of 343 crores. Third, the company's contingent liability is worth over 125 crores. Now, contingent liability is a possible obligation that may or may not occur depending on the future event. So, low to nil contingent liabilities are desirable. Fourth, the company's outstanding trade receivables for over 180 days stands at 25% of the total trade receivables. Now, trade receivables are money owed to a company by its customers. A delay or default in trade receivables can adversely affect the company's business. Fortunately, this number has come down from 47% in FY23. So, these were some key red flags of NSDL's IPO. Let's summarize our findings in the concluding section of this video so that you can decide whether you should apply in this IPO. Let's first talk about strengths of NSDL. NSDL is a pioneer of depository business in India. The company operates in a duopoly setup, with CDSL being the only competitor. This puts NSDL on a strong footing. NSDL is also way bigger than CDSL across multiple metrics. The company has a near monopoly on FPI holdings and dematerialized debt securities. Through NDML and NPBL, the company has also diversified its business and gone deeper into its role as a market infrastructure institution. Currently, NDML and NPBL don't contribute significantly to the company's bottom line. But when these businesses start performing better, they can help boost the company's profitability. The company's financials are in good shape, and the best part is the IPO valuations are at a steep discount to CDSL's prevailing valuations. Now, among the negatives is CDSL's better standing on key financial metrics such as revenue growth, profit growth, operating margins, and ROE. The company itself is not going to benefit from the IPO. Outstanding litigation, contingent liabilities, and trade receivables can also be an area of concern. Finally, if NPBL fails to turn around in reasonable time, it can be a drag on company's performance. The valuation discount can very well be meant to compensate for NPBL's lackluster show. And with this, I have told you what you need to know about the NSDL IPO. What do you think about it? Will you apply for it? Do let us know in the comment section. And I hope you liked this video. And if you did, please share it with your friends and family. I'll be back soon with another video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.